The Federal Reserve is expected to hold rates steady next hour, but investors are looking to the future as a new era at the central bank kicks off today. In about an hour, Kevin Warsh will make his debut at the podium after leading his first meeting as chair. He's pledging to reform the Fed, change old models, shrink the balance sheet, and scrap rigid forward guidance. Larry, I invite you to talk about this first podium appearance that Kevin Warsh has, or anything that really has piqued your interest on the economy.
Well, look, Kim, first of all, I think it's a great time to be Fed chairman, new Fed chairman, because inflation's come and weighed, and inflation is plunging, and the economy is booming. So it's like, what's not to like? Now, people get in a tizzy about that. You know, strong growth causes higher inflation. More people working causes higher inflation. I say none of that is true. Throw out the Phillips curve model. I wouldn't be surprised if Kevin said something to that effect. That would be good. Too much Fed yapping. I don't know how you politely. He's a good diplomat, but he's got to try to. May
not say the word yapping, but
he might not use yapping.
To that effect.
I think the term forward guidance, which I've never really understood, might include yapping.
Can I ask you a question?
I don't know. Too much yapping here. Don't forget also the dot plot. He wants to end the
What are the odds that he doesn't submit a dot on the dot plot?
Decent odds, good. You know, he has to make a few points to echo his very good Senate confirmation. He said a lot of this stuff in the confirmation, and so it carries over. Now, he may not want to do it all today. Remember, he's got to deal with the people on the board. He has to be a diplomat. He has to win them over. So he's got those issues, too.
AI is giving him an 85% chance he does not submit a dot on the dot plot.
Well,
I'll just leave it there.
I wouldn't mind. I mean, it'd be kind of a cool thing if he doesn't do it at all.
Bet on anything these days.
But you mean no dot plot from any of them?
No, just from him. Like, what if he abstains?
But how do you know that what his dot is?
Yeah, we don't.
So how do they know? So that's kind of not a good...
Well, it'd be one fewer dot, and you'd just make a guess, I guess.
You know, we have better verification with Iran than we do on that one. I mean, they don't sign the dot, right?
No.
No.
Not that I'm aware of. So we don't know if he's going to throw away his dot, but Lydia, what do you think about this?
Well, I guess just on this point about kind of pulling back on forward guidance, and I know that there's a lot of the appetite is welcoming to that because we've been concerned about what happened under the previous leadership, which is too much forecasting that's been happening. But I do just consider the alternative, which is, and Larry, weigh in here, which is the worst case? Is it worse to forecast and then not do what you forecasted? Or is it worse to offer some type of surprise because you said nothing at all?
It's bad to always get it wrong.
Okay.
That's really the Fed's problem. I mean, the dot plot might have meaning if they ever got it right, but they've missed all the major turning points. I mean, just under Jay Powell, but he's not the only one. I'm just saying. So that's why it's kind of futile. Look, forecasting's very hard. I get that. So why do it? There's nothing that says central bank has to be its own worst enemy as a forecaster. Substantively, I'd be interested to know about the balance sheet. What if he has any public statements regarding that? Because that, after all, will affect money supply and the holdings of various government and mortgage-backed securities. Be interested to see that. I don't know that he'll go there, but I mean that's an important point. And then they're not going to move rates today, are they? I mean, nobody expects that.
Dagan, what do you think about the balance sheet issue?
Well, I'm not going to steal Dan Clifton from Strategicus, his thunder, but that's what Dan wrote about today, is that it's not about rates, it's about the balance sheet. And because the balance sheet, because of concerns about the reserves, has been increasing. I did not look this morning. It was about roughly 68 billion since December. But the money supply has been increasing since then, slightly, but the money supply is growing. I did want to note the 5-year inflation break even, so that's nominal versus real bonds of the same maturity, treasuries versus tips of 5 years has fallen sharply since early May, though. Even as these big prints on CPI have been coming in from 2.72 to 2.36 on Tuesday. And this was happening even as these Iran-inflated consumer price readings were coming in. And it's interesting because it changed the dynamic, that the expectation that the Federal Reserve was going to lower interest rates shifted. And if the Fed was going to lower rates, that was going to stoke inflation. And even if the Fed is just on hold, that's better for inflation. And that's one of the reasons I think that you have these inflation break-evens falling
and
so
real rates
dramatically.
Real rates have gone up, which means the economy is stronger.
Oh, could be a growth story here.
It's a return on capital, better growth. So look, the Fed here. This is the reason. Sort of come back to your point. I don't mean to run over. I'm going to run.
Larry, we got to go in like 10 seconds. Give me a quick 5 seconds on this.
The Fed on the verge of tightening, raising rates at exactly the time that world oil prices are plunging and our inflation rate will turn negative. That's why they should not do the dots or forward guidance.
No doubt.